What's up, guys, and welcome to Tim Talks, the real estate show where we talk about a little bit of everything in the real estate world, and we bring in special guests to discuss entrepreneurship and how you can better your personal and financial lives. Today is a special day because it is the inaugural episode of Tim Talks, and we're still kind of building what this show is going to be and what we're going to talk about. We have a lot of really cool ideas, but one thing that we were for certain we wanted to do was bring in a special guest every episode so that you guys are not just hearing from me, but you are hearing from other professionals in the business world. So today we've got Josh Botsford from DC Lending.
Yes,
so
sir.
Thank you so much for joining the show.
Absolutely.
Yeah, Josh is with DC Lending. I already said that, but Josh.
You gotta remember the name, you know.
Yeah, yes. Just repeat it over and over until the consumers get it. Josh was DC Lending up in Vancouver, Hillsborough. You have several different offices. I know that. And he's been working with them for a while now, and he's been doing great work up there, closing a lot of loans. I call him my emergency guy because when everyone else is like, I can't do this, Josh steps in and gets the job done. So that's my little shameless plug for Josh.
I appreciate it.
Yeah. I want to bring him on the show today to talk about what it's like to be a loan officer, different things that he's looking for when customers come to him and have, clients come to him and have their loan that they want to get pre-approved for. And then just a little bit about what is life as a young, honestly a young entrepreneur, because that's what you are. And that is what, anyone in a career like this is a young entrepreneur. So let's get right into it. What are three things that clients, anyone who's thinking about getting pre-approved, what are three things that they can be actively doing in their lives to get ready to be pre-approved for the dream loan that they want?
Sure. I think, ultimately it comes down to, a few different things. Your down payment is going to be one of them. So while we do have different programs such as down payment assistance, I think the best route to go is, the more you put down, the lower your payment's going to be. And everybody wants a lower payment. And so, whether that be, you want to save as much as you can, for like a $400,000 home, right? You put 5% down, it's $20,000. Plus closing costs, $6,000 to $8,000. So you really want to be cautious and conscientious about what you're spending and what you're saving. If you can, save as much as you can, really. I mean, I know it's tough with, rent being where it is these days, for sure. But you want to make sure you're saving as much as possible. And I think, if you can get to that 20 grand, 30 grand mark, like you're definitely in a position to put a down payment down. And
so you think 20 to 30 grand is somewhere in that zone is where, somebody who's looking to buy their first house, that's where they should be hanging out at?
I would say so.
Okay, yeah.
We can have products go as low as 3% down,
sure.
Which are really useful. But again, the lower you put down, the higher your payment's going to be. And so I'd say that 20 to 30 grand area is pretty healthy.
That's a good number. Okay. And you mentioned real quick, closing costs. I get a lot of people going, what the hell are these closing costs? Why am I paying another 6 to 8 grand? What are they paying for?
They're paying for a variety of different things. One of them is going to be like title insurance. And then, there's the stuff as, your appraisal, your credit report. There's also what's called prepaids. And so instead of, paying your property taxes, twice a year or once a year, depending on where you live, you build it into your monthly payment. And they, that's part of closing costs is prepaying, property taxes or prepaying homeowners insurance, right?
Right. It's like when you have a year-long subscription and they make you pay it all at once.
Yeah, you pay it all up front.
Sure.
Exactly.
Yeah. Okay, cool. So we got one thing. It's get your down payment to 20 to 30 grand, okay? Or your cash on hand to from 20 to 30 grand. What's the second thing?
Sure. I mean, I think probably one of the biggest things is your credit, right? Underwriters want to see like, hey, they are established borrowers, whether that be, a car loan or just your credit cards. They want to see established borrowers, people that are going to pay their stuff back.
Right. They're taking a risk. They
want to see that you're, you've taken risk before and you can, pay them back.
Yeah.
But on the flip side of that, you don't want to be running your credit cards up. If you have a $5,000 limit, you don't want to be hitting that limit every month.
Right. Revolving utilization, I think, is 10%. So use 500 of that 5,000.
Exactly. And I think a lot of credit sources at least want to see it below 30%. They want to keep that below 30% utilization. So that means, if you go above that, you go to 2,500, just pay it back down.
Right.
And along with that.
Now, real quick question for you. What I see on Credit Karma, now I know you get this a lot. I open up my little Discover app, right?
Sure.
I open up Credit Karma and it tells me I got 780 something, right? Yeah. Is that what you guys see? I know the answer.
No, Credit Karma, hey, it's a useful tool. You're first getting a credit card. It's a useful tool. Like, hey, this is where I stand. But after a while, Credit Karma gets to be pretty inaccurate. I'll have borrowers come to me being like, I promise my score is 700, and we pull it, it's 630, right? That's I'm serious. Like, those are the ranges we're talking about. It could be 50, 60, 70 points off. And so ultimately, like, you don't really know your credit without getting, that hard pull or even like a soft pull. Yeah. But Credit Karma, not the way to go.
It's not always reliable. So, okay, what's our third thing?
Man, as far as the third thing, I think it's kind of goes along with the credit. You don't want to be, like I said, while you want to be showing you can pay stuff back, you don't want to be racking up liabilities. Right. If you have $3,000 in liabilities every month and you're expecting to pay a $2,500 mortgage and you make $6,000 a month, there's no shot, right? Yeah. So you want to make sure you're, like I said, keeping it below that 30% threshold. You want to be careful about taking out big loans. Car loans are great. It's a great, installment loan that you pay back every month, but sometimes those can range like 500 to 1,000 plus. Right. And
for my Model 3, it's probably, no, I'm just kidding.
Yeah, exactly. Hey, that's the goal. That is the goal. That's what we're going for.
So now I've heard a lot of people say, buy assets, not liabilities. When you guys are looking at folks' applications, if they buy an asset, right, does that add to the value or does that detract from the value? Because obviously they still have another payment to make, but it's not something that depreciates in value. It's something that appreciates in value.
Sure. As far as qualifying, that doesn't make a huge difference unless it's like real estate owned, you're renting it out. So I've had people, come being like, hey, I live in one half of a duplex. I'm renting the other side. I'm moving out to a new house. I'm going to rent the other side. That's great because we can use that rental income and that either cancels out or gives you extra income, which is, right where you want it. But as far as like car loans.
Let's go over that one more time real quick, because if you have a duplex or really even a house that you're like house hacking, right? And you are charging your renters. So let's say your mortgage payment is $2,500 and you are charging your renters $2,500 to be there in the house with you or on the other side of the duplex, that cancels out.
Exactly. And I think people will sometimes be like owning real estate, and they're like mortgage is $2,500, their renters are paying $2,500, and they're like, well, I'm only breaking even. I'm not making extra money, but you're building that equity for free. Right. You're not paying for something that's building you equity. So, every month you're putting that money into your pocket, but you're not paying for it, which is huge. Yeah.
Well, that follows along my genius plan that I've had for quite some time is to, obviously this one's gonna be tough to run past the girlfriend and eventually wife, but to house hack for as long as I possibly can.
Why not?
And build a portfolio of properties. I think that is one thing that some people don't realize is as possible as it really is, or realistic as they think it is. And I think it can really be a pathway to wealth, which is, one of the reasons why I just bought my first home.
Yeah.
Shout out Josh.
Congrats.
Closed the loan for me. Thank you.
Made it happen.
Yeah.
Made it happen.
But I think that's a big thing that people miss is that, sometimes I think people think they're one and done, but there are certain hacks that you can work with. And that's what the show is all about. It's giving you guys some nuggets to walk away with, that you can apply to your own life. So thank you, Josh, for that one.
Yes, sir. Absolutely.
Yeah. So those are 3 things that we can all do to improve our potential to get qualified for a loan. You become rich by borrowing money. I've learned that.
Yeah, absolutely.
And so put yourself in a better position to borrow as much money as possible, and you'll be on the way
in a healthy way.
In a healthy way. Yeah. All my listeners go and they just gamble all
sure.
Yeah.
Take this credit card, this credit card.
Yeah. No. Yeah.
With a grain of salt. With a grain of salt.
Yeah. Let's move on to our next subject. I love stories. I want to hear about some interesting stuff. And don't say my loan, okay?
It was Tim's loan.
But what is the craziest loan story that you have ever worked with?
I mean, I think it's kind of tough to nail down. There's been a lot of crazy stuff. I mean, I think one of the things that blows my mind the most, at least, this isn't necessarily a specific crazy story, but a lot of times I think it's hilarious because it's the people that, make good money, $6,000, $7,000, $8,000 a month, don't have a ton of debt. They have like a 760 credit score, and they're like, there's no way I can afford a home. Like, I can't do it. Like, it's too much. But then we get the other people on the other side of the spectrum. It's like, hey, my credit score is 500.
I'm unemployed.
I make like, $1,200 a month. I can afford a like $2,500 mortgage, right? No, like, there's no way. Yeah. So I mean, I think that's like the craziest thing is just like the broad spectrum of like mindsets. The people that are like in a perfect position to buy a home, but they don't know it or they don't think they are, versus the people that are like nowhere close, but they're like confident that they can do it.
Right. Well, I mean, I don't know. I love getting everyone through the door, right? Everyone who is, they think that when people come to me, because usually they come to me and then I get them over to you, but they come to me and they're like, I don't make any money and I still want to help those people.
Sure.
And they make a ton of money and I obviously still want to help those people as well, right? So there's two different sides of the equation. There are some people that do have really unrealistic expectations when it comes to it.
Like you said, I mean, our whole goal is to help those people. And I think for me, those have been the most rewarding loans that I've closed. It's the ones that come to me like the $500 or the 500 credit score, low income. And, we give them a detailed plan like, hey, these are the milestones you got to reach. I mean, you got to have, X amount for a down payment. Your credit needs to be around, at least, ideally 620 to 640. You got to want to get up to those thresholds. And obviously the higher you go in credit, the better your pricing is going to be. But it's always so rewarding with those people. They come back in a year or whenever and they, they're ready now. And it's so rewarding when you like, I mean, that kind of can change the course of their, financial life, right?
Their destiny.
They're building that generational wealth now.
Yeah.
They went from the 500 credit score, low income, to now, even if they're not making a ton, they're building generational wealth. They're building that wealth in real estate, which is, it makes it so much more rewarding for us,
Yeah. Yeah. No, I totally, I'm on the same page as you because, like I said, I get a lot of those people that walk through the door and it's like, oh boy, Josh is going to hate me for this one.
Yeah, exactly.
But at the end of the day, like if you're able to close those and get people down the right path, like that's where I find meaning in my job.
Sure.
And also, on the flip side, the people that, like you said, have a lot of money and don't think it's possible, just changing their mindset and framing it in a way that's like, oh, wait, this is not as scary as I thought it was going to be. It's, actually something that's pretty realistic for me. So
Absolutely.
Good stuff. I love the number 87 right now. That's one of my favorite numbers.
Why is that?
It's about to blow your mind. 87% of realtors do not make it more than 5 years in this business.
Dang.
Right. So after about 5 years, they're out. And, when most people choose a career path, they're with it for a little bit more than 5 years. So it's not just, they did their career and they're retired now. Right. You're expecting a little bit longer than that. So 87 is a big number for me.
Sure.
Right. Because we're young. We're not brand new to this business, but we don't have 30 years of experience like some of these people, that we run into in the industry. But 87%, that's a pretty big number. So, my goal for myself, my goal for my colleagues I work with, and my goal for, anyone that might be listening or watching that is thinking about this career is to provide a few stepping stones, a few things that can help them with their own journey so that when they start this, they're not feeling lost. Because I'll tell you what, when I started this career, I started with a online cloud brokerage. I was sitting in my office for my office being my bedroom for 8 hours a day, having no idea where to go, having no idea, what even lead generation really was, having no idea what CRM was, didn't know how to build anything, really anything about a business.
Sure.
I just knew that I had a desire to serve people. I had a passion for people, and that I wanted to, touch as many lives as possible. But sometimes that passion and that drive is not enough. So you have to have specific things that are going to keep you afloat, keep you in this business. So without giving away your secrets to success, which eventually I will get those out of you.
Yeah, we'll see.
What are 3 things that young people could, first, before we do that, what's the turnover rate for lenders?
I don't know off the top of my head, but I would imagine it's similar.
Fairly similar.
I mean, we do like maybe more loans, but get paid less. Whereas you guys, it's vice versa. You might do less transactions, but
get paid a little bit more.
It kind of evens out. So, I mean, I don't really know, but like you said, I'm determined. They call them like the COVID realtors, the COVID lenders. When transactions were falling out of the sky in 2020,
everyone wants to be a part of it.
Everyone wants to be a part of it. Refinances for us is like you basically walk out your front door, you have a refinance.
Right.
And now it's not like that. And so, like you said, there's a lot of turnover right now. And, I think that's what sets us apart as, young professionals is we're determined like, hey, we're going to see this through. We want to see it through the hard times of the market as well. So.
Absolutely. So what are a few things that you've been doing? Maybe this was before things started to get a little bit crazy with the market, or just what you're currently doing to better your business and make sure that you don't become, at least in the real estate world, part of that 87%.
Yeah, sure. I mean, there's a variety of things because I definitely at the beginning struggled, in the same way. It's like, all right, I'm gonna go sit at my desk from 9 to 5. Like, I don't know what I'm gonna do. And then you run out of things to do. It's like, well, Netflix is there, right? Especially working at home occasionally. But I think now I've kind of gotten it dialed in a little bit more. And, I think our company has helped us, helped set us up for success. We call it like a power list, our power list. And basically what that is, it's like the non-negotiable activities every day. We choose 5 things. Hey, we're going to do these every single day. And that's going to push the needle further, right? Even if you sit and watch Netflix, eat chips for the remaining 7 hours of the day, you still move the needle forward with those 5 activities. And so, for example, it can be, even like, mentally or physically, like one of mine for a long time was go to the gym, right? Because when I go to the gym, I feel energized. I feel I have a better outlook on life, on work. Like I feel more motivated. So that was one of my non-negotiables. I go to the gym. Another one, is, reach out to someone new or set an appointment every day, or go on an appointment every day. It's one or the other, or a networking event, or invite someone to a networking event, post about a networking event, keeping up on social media. Those are like my non-negotiable things every day, and that moves the needle forward. Even if I watch Netflix the rest of the day, I move the needle forward that day, no matter what, which I think is a valuable thing to think about. And it comes, kind of wraps back into that whole time management thing, which is critical for this job, is managing your time. I think it's easy to, sit down at your desk and like, I don't know what today holds. I don't know what I'm going to do. You waste an hour thinking about what to do, and you're like, well, I don't have anything. Waste another couple hours. Like it really comes down to committing to the activities that are moving forward.
Yeah, I think those non-negotiables that you're talking about are really important because I don't know if this is the case for you, but I think you kind of touched on it. It definitely was the case for me. I didn't know where to start, right? I knew that I had work to do, and I knew that, there was things that had to be done, but I didn't know where to start. I was like, okay, so do I call people first, or do I try to organize the people that I'm going to call first? Like, and you get so overwhelmed that you sit there for an hour and you're like, I haven't done anything, right?
Yeah.
And so, but I think those non-negotiables, what they do is they kickstart your day.
Sure.
They get you going. I have specific goals that I do it every single day, right? I'm going to make 3 TikToks every single day. I'm going to contact 20 prospects every single day. And I'm going to, before the day is over, contact the people that, have to have reminders, right? Or, hey, this is your earnest money deadline. Hey, this is, or even if they're not even under contract yet, hey, I've been thinking about you. Let's go ahead and get you ready to get the home buying process started. Stuff like that. I have those non-negotiables as well. And what that helps do is it almost, because every day stuff will come up, right?
Yeah.
I will get blasted with things left and right, right? But that's not always how my day starts. So if I just sat there and was like waiting for stuff to like blast me, then I don't think that stuff would ever happen. Because it's because of those non-negotiables that I do that the other stuff starts blasting me. I said blasted me a lot.
Blasting.
This is getting weird.
Like killing me.
Yeah. So starting and doing those non-negotiables, I think what it does is it lays the foundation for the rest of the day. And like you said, you could sit and watch Netflix and eat chips for 7 hours if you only did that 1 power hour a day.
Yeah.
But because you're doing those things, the rest of your 7 hours are going to be filled with just everything that comes from doing all those other non-negotiables.
Exactly. And I think that's how it really works. And I guess with that power list, it gives me confidence every day. Like, hey, that took me 2 hours. Great. Yeah. I did it. I'm done. Or that took me 8 hours. I did it. I'm done. Regardless, I'm getting those things done and it's moving it forward. And like you said, those things are going to lead to, for me, loan apps or, pre-approvals or loans that fill up the rest of my schedule. And it all comes down to those compounding activities. And I guess I think of it this way, right? You said you call how many people? 20?
20 people a day.
20 people a day. 100 people a week.
Right.
400 people a month. I can't do the math past that, but however
12 times 4, somebody help.
148, however many it is a year, right?
Yeah.
Should be better at this in lending, really. But those things compound, right? And it's, that compounding effect. And like out of those 400 people a month, maybe even 2, 3, and, eventually, hopefully more like are going to turn into transactions, going to turn into loans, going to turn into clients. And so I think it's all about those compounding activities, and it can be, the same thing can be applied to life, right?
Yeah. I
go to the gym for an hour every day, 5 hours a week, right? For the weekdays, 20 hours a month. And that's like, those things are compounding. And, I think it can contribute a lot to mental, physical health, as well as work-life balance and all of it,
Yeah. I think the key word there is consistency.
Consistency.
You have to, you have to be consistent with it. Your leads could be, they could be trash. They could be shit. Let's be real.
Yeah, honestly.
Your leads could be shit. But if you contact, I think I just did the mental math in my head. Ethan, 4,800. Is that 12 times 4?
I think that's right.
12 times 400.
Man, we should switch jobs, honestly.
4,800, right? If you contacted 48 people and they were terrible leads, like these are just not people that are likely to buy a house, I'd be willing to bet you money that you get 5 people out of those 4,800, right? And that's not the low hanging fruit, right? The low hanging fruit is your mom or your cousin. Yeah. Everyone's going to have their mom or cousin buy a house at some point. That's the low hanging fruit. But if you go and do the dirty work consistently, 4,800 people a day, you work out for 20 hours a week at the gym, what is it that you're saying? You're going to start to grow muscle. You're going to start to grow your client base. And that is how you make it in this industry, is by meeting people that you don't know.
Absolutely.
Because your mom can only buy a house once every 5 years or so without that pipeline drying up. And so, I think that's really good. Consistency is definitely what has helped me so far. I think one thing that's cool to note is that both, some people, this is kind of a touchy way to go about things, but some people join industries like this for a variety of reasons. Sure. But this is not an industry that you have to join because you have a degree or you went to school for 8 years. You go to, you take some online classes and you pass a couple exams and you're good to go on this. But you and I both have college degrees. You have 2.
Yes.
I have a major and a minor. And I think it's really interesting because I think there's people out there that are probably thinking the same thing. Like, I went to college for 4 years. I went to college for 5 years.
Sure.
And at the end of the day, I'm technically not using my degree for what I am doing. And I think to a certain extent, that makes it harder for you and I because we have a fallback plan, right?
Yeah.
There's some people in this industry that are like, I didn't graduate high school.
Yeah.
And so this is my only
Boom
shot, right? But I think for some people sitting out there, and especially for ourselves, it can be difficult because I can look, I'm like, I can make $70,000 at a marketing job. I could just do that.
Sure.
But that's not what my purpose is. That's not what I'm called to do. And so I think it's important for anyone that's out there listening. you might have a fallback plan. You might have something to fall back to. Yeah, you might say, I just wasted 4 years at a college if I'm not going to go into my field. Yeah, absolutely. I get what you're saying. But I think at the end of the day, don't be afraid to, step out and step away from the safety net to a certain degree. Because
Absolutely.
I think, I guess I'll just share this story real quick. A few months ago, I was up for a marketing job at a different, obviously a different company. It was a nice marketing firm up in Seattle. It was remote, right? It was perfect. I was gonna get to sit at my desk in my home office.
Yeah.
And it was an awesome opportunity. They were gonna pay really well. And I was just like, I was torn because I was like, man, real estate or this, I can go to this safety net. I can fall back into, a nice salary that, I
Sure.
don't have to necessarily work my butt off or hustle my butt off to get this paycheck at the end of the day. Maybe that sounds nice to me. It sounded really nice, especially since I was, buying a house, and it would be nice to have that consistency coming across my desk every, 2 weeks. So I was torn about it, really torn about it. And I just kept on kind of asking for clarity. I wasn't sure where that clarity was going to come from. And I thought I was going to get the job. My friend who referred me to the job said, hey, you're pretty solid here. You basically got this job. They let me know that you basically have this job.
Sure.
I was like, that's awesome. But still, that doesn't help me. I'm still torn.
Yeah,
right.
yeah.
So I get to the day, we had our first interview, second interview, third interview. They all went great. I felt like I knocked them out of the park. And I was being told that I was knocking out of the park. Well, I get to the last day where they're gonna announce who got the job. That same day, my friend tells me that he referred his other friend to the job as well.
Oh, that hurts.
Right? So,
that hurts, man.
so well, I was like, okay, that's not awesome. Like, go for the job as well. Well, his friend was very intelligent as well.
That hurts.
And so here's the thing. I get this phone call, and the lady goes, starts with the thank you for your, applying to this job.
Yeah, yep.
And we really, it was between you and this other guy. We decided to go with him.
Hurts.
Sure. Right. That in that moment, I was like a little bit like, okay, well, what did I do wrong? But at the same time, I actually started laughing on the phone call, and this lady had to think I was like batshit crazy.
Psycho.
Because she's like, sorry you didn't get the job. And I'm like, let's go, right?
Yeah.
Right. But for me, that was that clarity. Like somebody took that safety net away from me in that moment, and at that moment, I completely I had my buy-in moment. I'm sold. I'm not going for any other jobs that might provide me with that cushion of a salary.
Sure.
I'm going to go for this. I'm going to go and I'm just going to work my tail off, and I'm not going to quit no matter what.
Yeah, you're betting on yourself.
Yeah, betting on myself. I think that's a really good way to put it. And so I guess that's kind of a long way to say that to make it in this profession, you just have to have that grit, that consistency, bet on yourself. Mm-hmm. And so, to anyone out there who's listening to this, whether or not you have a college degree, whether or not that's your only thing that you have to work with, just continue to have grit, continue to have consistency. If you wanted to add anything to that, that was kind of my rant for the day.
I think I'd say, one last thing I'd add is don't get discouraged. Mm-hmm. I think it's easy to get discouraged. This job, I'll keep it 100. There's a lot of highs and there's a lot of lows.
Oh yeah.
Right? There's weeks that you get a lead every day. There's weeks that you get nothing every day. Mm-hmm. And I think it's one of those things, like I was saying, it all compounds. It takes time. And I've found myself being discouraged. I'm like, yesterday was a great day. And just because today is not as good as yesterday, it doesn't mean I need to get, down on myself, discouraged. But yeah, there's a lot of highs and lows, and I think it comes down to balancing those, managing those, and staying consistent. Because there's going to be days where it feels like you can't lose, right? There's going to be days where it's I'm making 6 figures easy, but then there's days it's I'm gonna make minimum wage.
I can't win.
I can't win. Just stay positive, don't get discouraged, and keep at it. I think it's especially those days where you're discouraged, where you don't want to do your non-negotiables. And when you do them, I think those are the days that you ultimately win. And with those, with that power list, that's how we classify it every day. It's, it's a win or a loss. Did you do them?
Right.
That's a winning day. You turn winning days into winning weeks to months to years. Pretty soon you look back and it's I've won the last 2 years. And I think, the results are going to show that for sure.
Yeah.
For sure.
You have to build a culture of winning within your life to win.
Exactly.
So,
Exactly.
Good stuff. Good stuff. Well, guys, that wraps up what we got for you today. The inaugural episode. I feel like this went pretty well.
It's an honor.
Yeah.
It's an honor.
Yeah. Thank you so much for sticking around and listening to this, guys. Thank you so much to Josh.
Absolutely.
From DC Lending. Hit him up if you need a loan. This guy's got you covered. He will work day and night for you. He did for me. So we had a really weird situation with my loan, but he got it figured out, and we got that thing closed.
Made it happen.
Yes, sir. But thank you again so much, guys, for joining us for this episode of Tim Talks. Make sure to, if you're watching this on YouTube, like and subscribe. I've always wanted to do that.
Exactly.
Like and subscribe. Make sure to follow on TikTok. We're on Instagram at Realtor Tim Kaelin on both of those platforms. Wherever you get your podcasts, make sure to drop us a follow. We will be here weekly, so make sure to follow that. That way you do not miss anything in the real estate world, and you can follow along for your daily or your weekly inspiration on how to make it in this career, how to be an entrepreneur, and how to better your financial and personal life. Thanks again, guys, and have a great week.